Nasdaq hits a record high. Thank goodness, because the global economy is at a level it hasn't been at in a century. At least we can check our 401ks and Robinhood accounts to cover up what's really going on. It's like spraying Febreze over the stench of the rot. It won't fool anyone who's actually paying attention. You came here for the truth, so let me unveil that for you. Today we are going to talk about the plug that's been pulled, and that's the economy. We're looking at what's been happening on a deep level, on a realistic level, and actually trying to pinpoint what's happening here. I show you this through various indicators, and in this video I'm just going to give you a small piece of the puzzle. On this channel I give you the updates all along. Some are weekly, some are monthly, and slowly but surely we piece this all together. Today is an extremely important video. We're going to talk about the store closures, the bankruptcies, what's been happening to the economy in general. Likely I will have to split this into two videos, so you will see another video come in the next day, but this right here is just going to highlight what's been happening, particularly with the economy. The next video I do is going to include what the Federal Reserve has said, and let me just say, it should spook a few people. So let's begin. Forbes has tallied up how many stores have closed already. This is not the projection. This is not the most likely scenario. We are talking about what's going on right now today in 2020 July. More than 8,700 stores are closing in 2020 so far, a number that will surely rise. Typically, I show you the information from CoreSite. They are not updated as of right now. This is coming out of Forbes. We won't know, of course, until the end of the year what actually happens, but it looks likely that Forbes is correct. The number is going to go up significantly. Debt is now the common enemy. Every retailer who had high debt before all of this started is closing some stores and cutting back on new projects. Remember that. I've talked about this in previous videos as well. At a time like this, ability to raise cash and to maintain a semblance of free cash flow is quite difficult, even as it is invaluable and inviable for most retailers. Many have had to rely on more borrowing to sustain their business. It has left their future uncertain. Look at what's happened with all of these corporations. Their debt is a huge risk, not just to themselves and those holding it, but of course to the financial system in general. A lot of these funds are buying into this, and unfortunately it's going to turn sour. We are witnessing a retail apocalypse. It began in 2010 when brick and mortar stores started to close, and it's only gotten worse over that time. They mentioned the number 8,700 stores closing this year. 2019's numbers officially 9,300, though I think it was Goldman Sachs who had totaled that higher. Doesn't matter. The numbers are historically high. This year will likely be surpassing that and may have already done so. We just don't have the numbers behind it. I keep seeing the same thing all the time, and it's suggesting that you don't have to worry because as these stores close, new ones will open, but that isn't the case. A large percentage of the public are in retail. If the retail's closing, what's going to happen to the jobs? Oh, they're going to just work on robotic technology. So one day they're a cashier, the next day they're a programmer. Sure, some people will retool. Some people will learn new abilities, but for a large percentage, they can't do that. The time frame might be too short. It's not as if you can just hit the switch and suddenly you have a new skill. Of course, that's not going to happen like this. The rate at which we are changing is too fast. It's not as if through a generation there's a new technology there and so jobs are shifting. That's not happening. It's happening at a rapid pace. That's the important part. Real estate CEO expects exodus of central business districts to last the next 2 years. Of course, there's a serious problem right now, and I think that when you look at any of the major skylines, big cities, whether we're talking about US or other countries, Canada, countries in Europe, Australia, New Zealand, and so on, the big towers are these financial establishments, the big banks, and oftentimes they may occupy a few floors in those buildings, but they rent the space out to other companies, maybe similar ones, maybe insurance companies, could be anything else. But right now, they're working from home, and that is actually something that's going to be the trend in the future. Many companies have said this publicly. I have heard this from many different sources coming across different countries as well. They are suggesting permanent work from home or part-time work from home. So maybe when this this next year time frame and so on, when everything goes back to quote unquote normal, they're going to work from home for 2 days a week, 3 days a week, and so on. There is less real estate needed. Commercial real estate is going to be something that takes a hit big time. You can look at the commercial mortgage-backed security, something that I have talked about in numerous occasions. This is very different from what we saw during 2007 timeframe, but the problem at its root is in fact the same, because the debt that's connected with it, the derivatives that are connected with it, all pose a problem to the system in general. United warns 36,000 employees of potential job cuts, and of course the demand for air travel is not very good right now and doesn't seem like it will be back to the pace it was at the beginning of 2020 for a long period of time. United is planning to warn about 36,000 frontline employees about potential job cuts. The terms of $25 billion federal aid prohibit airlines from laying off workers until October 1st. Airlines are urging employees to take buyouts or early retirement packages to avoid involuntary cuts. I love the terms that they use, it's hilarious. But regardless, what we are seeing here is a problem that wasn't supposed to happen. As they mentioned right here, they're not supposed to get rid of people. If they've taken the bailout money, what's going to happen? Well, we'll see. This article here just mentions the fact that 36,000 workers is 45% of the US positions. So we're talking about a massive number. It's not as if they're laying off 10% of their workforce. We've seen instances like this before. This is nearly half of the US positions. A provision of the CARES Act requires airliners to avoid furloughs or pay cuts. However, United suggested the bleak outlook leaves the airliner with few other options. The truth is, none of the decisions so far have been more difficult than the decision we are announcing today. Involuntary furloughs that we worked so hard to avoid are the last option left. Yes, we took the bailout money. Yes, we agreed to the terms, but people are going to get laid off. And I know some people will say it's United's fault. It's United that's bad. No, the system is rotten to the core. And until we realize that, it's just going to be the same cycle over and over and over. Storied apparel brand Brooks Brothers files for bankruptcy as it seeks a buyer and closes dozens of stores. So already there has been some store closures. We can expect a lot more coming, not just from this one company, but many others. There hasn't been the demand there right now over the last few months, obviously with so many of the stores being closed. But many different businesses like this are going to be in a world of hurt. If a lot of people don't need to be going to work, they won't have that demand for business type attire. And a lot of people, I'm sure, are pajamas on the bottom, business up on the top when they're on their Zoom calls. So it's going to be interesting just to see how this changes the entire fashion industry, at least in the short to medium term. If you're a regular here at the Money GPS, you know how I like to get data that I call second and third tier information. Yes, we can look at the unemployment rate that they give us from the BLS, the U3 unemployment. We could see the jobs numbers are posted every month. This is all fun, but really it's nonsense. I like to look at that which you need to piece together 2 or 3 or 5 or 10 different things, and then suddenly it's much more telling than what we generally get from those government provided statistics. Apple Maps driving activity is slowing again, in warning sign for the economy. Apple Maps data shows a slowdown in requests for driving directions, a potential warning sign as the country works to restart the economy. The 4 states that are the leaders in average daily new cases over the past week, Florida, Texas, California, Arizona, have each seen a recent decline in driving directions requests. Isn't it interesting that this is happening like this? I don't think it's necessarily a coincidence, of course. Here's the chart that corresponds to that information change in requests for directions on Apple Maps in the US, and you could see on the right hand side how this has begun to dip downward. We'll see in the coming weeks if this is a continued trend, particularly if it happens to match up with what we're seeing with these different areas that are closing once again. This just gives you a breakdown at the state level, Arizona, California, Florida, Texas, showing you the same information as we see it moving downward. If you have some time, I would highly recommend checking out this link. I'll have it in the sources as always, but if you want to check it out, yelpeconomicaverage.com. It gives you so much that is just really good. It tells you a lot of information, at least from what Yelp can provide. Some businesses slowly reopen while many permanently close. As of June 15th, there were nearly 140,000 total business closures on Yelp since March 1st. In April, we reported more than 175,000 business closures, indicating that more than 20% of businesses closed in April have reopened. So you can see the chart on the left-hand side. It gives you a little breakdown, different cities. On the right-hand side, just showing you June 15th, left hand, April 19th. It gives you a comparison between the two. There's so much more in here. I do not have time to cover it, but if you have a few minutes, definitely browse through this site. It's really good. This article here out of Bloomberg is talking about what's happening in New York, particularly with the real estate. They get into many different issues, many different aspects related to it. Essentially, people are in excessive debt. They do not have enough people actively looking. They're just kind of staying put. They can't really afford anything at this time when properties do come up on the market. They get into evictions in here and what's been happening, the struggles from both the tenants, the landlords, financial aspects, and everything in between. Typically, a studio would go for $2,600, but it's now $2,300. A lot of landlords are offering 1 month free rent, and they're paying the broker's fee. It's a tenant's market. Of course, tenants with jobs are getting harder to find. Towards the bottom, there's an interesting point. About 40% of the tenants in her family, is referring to a particular individual, they've got 50 plus units. They didn't pay in June. 40% of those tenants. We are rent check to rent check like our tenants. We have small cushions. So understand here that's affecting both the average person as well as the landlords, as well as the business owners. Everybody is hit by this in one way or another. The elite at the top, the Jerome Powell minions of the system, what's happening to them? They're getting more and more wealthy. They know this. They created the system like this. Minions like Powell are able to profit from it. The globalist elite are able to do whatever they want. They create crises, they create problems, and of course, they can provide the solutions. I wanted to finish off with this one here. My friends in Australia, panic buying returns as Melbourne braces for lengthy lockdown. If I pronounced that wrong, you can give me some heck in the comments. But regardless, what we're looking at here is a serious situation because this isn't over yet. Clearly, they want the situation to go on. They're locking it down. The economy is shutting down. It means that if there was any resurgence in economic activity, it's going to get squashed. Everybody thought 2020 was going to be so fantastic. It's fantastic for Amazon stock. It's fantastic for Jeff Bezos. But for the average person, I still don't think it's hit them yet, unless they've been directly impacted by what's happening right now. There's so much more to this. I simply don't have time to get into it. I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. Fewer and fewer people, unfortunately, give the thumbs up. So for those who do, thank you very much. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. Do you want to understand e-commerce? Do you want to know how to sell stuff online? Well, of course, many people do, but they don't want to buy a course that is $1,000 plus. I've created a free e-course for everybody. All you got to do is sign up at theamazongps.com. The financial system, it's complex, it's convoluted, it is difficult to understand intentionally. This is what they want. These two books will explain everything you need to know. Check them out at the link in the description if you want the audiobook instead, themoneyGPS.com. Wait a second, don't go anywhere. This video has a lot of information that you need to see. If you haven't seen it already, definitely click on it. I'll see you there.